Hello, good morning. Welcome to today's webinar. Today is 19 March. So today on today's webinar, we'll give updates on two coal mining companies and the consumer sector, as well as a new US trading note on Microsoft. Firstly, let's talk about Golden Energy and Resources. Last week, they announced their 4Q17 and FY17's full year results. From the title, Great Quarter to End a Stunning Year, you can see that actually 4Q was a quite phenomenal quarter for Golden Energy, as they managed to deliver quite a stunning performance in 4Q. As a result, it delivered very good results in FY17. So you can see the all these results here. From the top line to bottom line, all these figures in FY17 grew almost triple digits compared to FY16. So basically, it was due to the ramp up of production as well as the increase in coal prices. And in 4Q, the production peaked at 5.5 million tons. So in full year, the actual production exceeded the annual target of 14.4 million tons. So as a result, the revenue grew by almost 96%. So as of now, the management guided that Golden Energy already secure several offtake agreements, total at 15 million tons of coal sales for FY18. So out of these 13 contracts, 9 contracts are for export, and the rest 4 contracts are for domestic supply. However, the cash cost was higher than expected in 4Q due to higher coal freight, mining overhead costs, as well as royalties. It is expected to maintain the cash cost at $23 per ton to $24 per ton this and next year. So what will be the outlook in FY18 for Golden Energy? As we knew that in March, the Indonesia government initiated the new DMO regulations, the domestic market obligations. Basically, the highlights of these DMO regulations were that the government will force the major domestic coal miners to supply 25% of their annual production to domestic market. And another thing is they kept the domestic coal sales price at $70 per ton, based on 6,400 guard coal. So for this price cap, it is only applied to the coal that are sold to the domestic power plants such as PLN. So we think that these new DMO regulations have a limited impact on Golden, as in FY17, Golden Energy already did 30% of the total sales to domestic market. So surely this year they can also fulfill these obligations in FY18. And the major catalyst for Golden is will still be the ramp up of production, as the management guided that this year they try to do 20 million tons of coal sales compared to FY17's 15.5 million tons. And also recently they newly issued a senior note worth at 150 million US dollars. Apart from the 15 millions apart from $50 million that will be paid back to the banking facility, the rest of the 100 million US dollars will be funded on working capital, as well as to support the potential M&As. So we think that this year Golden Energy will continue to grow at its production, and the price outlook for coal will be stable. So we maintain our buy coal with a slightly target price of 48 cents. The next is Geo Energy Resources. So in 4Q 17, his production was a little bit weak compared to FY16's 4Q, but we do think that its outlook is still bright in this year. So we maintain our buy coal with a little bit higher target price of 47 cents. So you can see the results table here. Like Golden Energy, due to the increase of sales volume as well as the average selling price, the top line and bottom line grew strongly at mid double digit and more than mid double digit growth. Because of the little bit weak production volume in 4Q17, you can see here. The full year production was actually in line with the adjusted production target, and so in full year FY17, it managed to deliver 7.7 million tons of coal sales. However, likewise, it was subject to a higher cash cost and interest burden in 4Q17. So the cash cost, the high cash cost was mainly due to the variable portion in that is associated with the coal prices, as well as the one-off additional mining royalties, and also because of the negative carry of the accrual interest expenses, there was a surge in finance costs in 4Q17. So moving forward, we expect the cash cost to be maintained at the range of $27 per ton to $28 per ton, while the finance expenses will be at least 24 million US dollars this year. The higher finance burden was because last year they issued the 300 million US dollars senior note at the interest rate of 8%. So for the outlook this year, we think that the new DMO regulations won't impact on Geo. Why? Because the DMO regulations will be only applied to the major coal mining companies with bigger reserves. So for Geo, their total reserves only total at more than 90 million tons compared to Golden's close to 1 billion tons of coal. So similarly, for Geo, the major catalyst for this year is still the ramp up of production, as the management guided that this year the target sales of coal will be 11 million tons compared to FY17's 7.7 million tons. And another catalyst is the potential M&As like Golden Energy, because they just issued the $300 million note. After they repay the NTM debt worth of around $70 million, the rest of the 200 over million will be funded working capital, as well as to support the M&A activities. Because the current reserves for Geo is relatively small, they aim to acquire another coal mines to increase their total reserves. So we do believe that Geo will expand their production by acquiring more coal mine moving forward. So next I will pass on to Ling Xin to talk about consumer sector.
Thank you, Guangzi. Hi everyone, this is Lin Xin. So I'll just briefly bring you guys through the consumer monthly report that we have published last week. So these slides actually give you a general broad stroke of the key observations that we had for the January data that was published recently. So all in all, we have been seeing some distortion coming in for the January data points. This is because of the timing difference of Chinese New Year this year as compared to last year. So last year you've seen Chinese New Year occurring in January, and for this year in February. So all in all, we have been seeing then there's some slowdown in the January data, but please do not be alarmed. We will await for the February data to confirm or to give a more affirmation on the trend lines direction. So if you look at a broader picture coming from a 3 months moving average, these countries mainly coming from the North Asia side, Malaysia, Thailand, Philippines, as well as Vietnam's, these countries have been showing a positive upward trend. As compared to Singapore and Indonesia, the January data is much more lackluster. However, we do see that there's some strong or robust underlying fundamentals that's supporting the retail landscape. First of all, we are seeing stronger consumer confidence coming from China, Hong Kong, and Indonesia. So there's some distortion of data where we are seeing strong consumer confidence coming from Indonesia, but it's not reflected in their retail sales. So what is actually causing the discrepancy might be due to the online sales that was not recorded in the retail sales index. Next, we are also seeing a better employment and wage growth environment coming from Hong Kong as well as Singapore. We are also seeing recovery in tourism, mainly in Hong Kong side. As you know that the mainland tourists likes to go over to Hong Kong to purchase luxury products, their health and beauty products. And as for Thailand side as well, as you can recall that tourism actually accounts for about 20% of Thailand's GDP. So with a recovery or a stronger recovery for tourism in Thailand, it may bring a broader recovery to the entire Thailand economy. So for the risk that we would like to point out is that there might be some political uncertainties coming from the looming elections in Malaysia as well as Thailand. We are also noting that there might be some inflation driven by higher retail fuel prices. As you know that oil prices actually hit $62 last week. And also there might be some food inflation coming from the rising agriculture prices, namely corn and soybean. So these two are actually the core ingredients for animal feeds. So if these two ingredients prices are going up, this might actually translate, or the higher cost might be passed on to consumers in medium or in medium term. We are not seeing the higher food prices at the moment, but do take note that this might occur in the medium term. And we are actually working on an agriculture report, so please stay tuned with us to know more about the trend. Last but not least, intensifying competition in Vietnam. So what's happening is that Amazon has announced that they are going to enter the Vietnam market. Vietnam's current e-commerce market is actually dominated by Lazada, which is being backed by Alibaba. So Amazon is going to compete in the same market, but they have not announced an actual date to launch. We are also seeing that Carlsberg, they have announced that they intend to increase their stake in Habaco. The stake sales is going to happen by the first quarter this year. And Habaco, if you are aware, is actually the second largest beer player in Vietnam, followed by Sabeco. And currently, Habaco is actually trading at about forward P of 40 times. So this also implies that Carlsberg cannot run away from the similar high valuation which Thai Bev had paid for Sabeco. So just to zoom down to some of the near-term catalysts that we might be seeing, one would be coming, or the very strong one will be coming from the World Cup, which we believe that it might actually lift beer sales by about 10% this year. So what happened is that if we look into the historical beer sales or production of beer in Thailand and Vietnam. So this year, if I could recall everyone, is that it's going to be hosted in Russia, where it will have a more favorable kickoff time as compared to the Germany and South Africa side, where we are in Singapore. We are about 5 hours ahead of the time zone in these two countries, as well as in Russia, and this is as compared to Brazil, which is about 11 hours apart. So if you take precedence of the two cases in 2006 and 2010, it actually jumped by more than 10%. So this is likely to benefit Thai Bev, which has exposure to Thailand's beer as well as Vietnam beer. And do note that Vietnam is undergoing a very strong structural growth, and this market is likely to benefit Thai Bev as well as F&N, as Vietnam is actually significantly contributing to both of these two companies' bottom line. So as you can see that from these right-hand charts, we are seeing a strong growth coming from the beer production as well as for fresh milk side. So this is a gauge for Vinamilk. So with that, I would just like to reiterate that we maintain our view that there will be a brighter regional economy outlook, which will translate to an improved labor as well as a wage growth environment, thus driving consumer confidence as well as spending. So just to reiterate, our call is that do note that we believe that Thai BEV and FNN is going to benefit from the structural uplift in Vietnam side. And for both coverage, we have a buy call, Thai BEV at $1.05 and FNN at $2.83. Next, I'd like to pass the floor to Kang Wei, who will talk about Microsoft.
Thanks, Sinsin. So, in case you haven't been following us, we released a trading note buy on Microsoft on Friday. Just to give a bit of background, we have an entry price at $94.18 with a last done of 94.60, a stop loss of 88.73, and a target price of 105. Reason for our uptrend, reason for our buying trade is recent action for Microsoft was it started its uptrend in about 2016, but because of the latest earnings results that came out in January, there was actually an overreaction to the earnings, which caused the price to dip from about $94 down to about $86. So the reason for this, why we say it's an overreaction, is that due to Donald Trump's tax plan, there was a one-time loss that Microsoft had to incur, which caused them to post a GAAP earnings of a loss of 0.82 per share versus the consensus analyst estimates of 0.86 a share. If you were to remove this one-time charge due to the tax plan, there was actually a earnings of 96 cents a share. Since then, the share price has actually recovered to before the dip, and we'll talk about the technicals and the charts later. So for now, I want to focus on the fundamental story of why we believe that Microsoft is trading buy. First of all, cloud computing, which was a very big thing for a lot of tech stocks last year and continues to be a very big thing for tech stocks this year, is continuing to grow. For the worldwide public cloud services, is expected to hit a 305 billion US dollars this year, up from 260 billion dollars last year. And when it comes to Microsoft's cloud offering, which is the Azure, if you were to compare to Amazon's Amazon Web Services, which is the market leader as of now, Azure actually managed to claim quite a bit of market share from Amazon Web Services. So Azure climbed from a 16% to 20% market share compared to AWS, which ceded territory down from 68 to 62%. Besides that, this is the 10th consecutive quarter for more than 90% growth. Microsoft's Azure actually grew their revenue by 98% year on year for the quarter. Your total quarterly revenue was still only 3.7 billion compared to Microsoft's total revenue, which was 28.9 billion dollars. And the entire intelligent cloud segment grew about 15% year on year to 7.8 billion dollars. So you can see that there's still quite a bit of room to grow, as AWS is still very much the market leader at 62% compared to the 20% for Microsoft. But at the same time, Microsoft is catching up very fast. So we believe that there's still quite a bit of runway for this segment of Microsoft's to grow. Besides that, if you've been following what Microsoft has been doing in terms of their Microsoft Office segment, you know that they've transitioned a couple of years ago to what they call the Office 365 subscription model compared to the traditional license model, which is when you buy those CD keys and you're allowed a certain number of installs for Microsoft Office. Right now, what they are trying to do instead is you do a subscription model where you pay a yearly fee, and then you get live updates whenever they update the Office 365. So Office 365's commercial revenue, so the subscribers from businesses, actually grew 41% year on year. And Microsoft reported that the number of subscribers now outnumber the traditional licenses, which is again the CD key model. So Microsoft says they expect to have more than 2/3 of their Office users to be subscribers by 2019, and this is important for the company because it allows them to secure a regular recurring revenue. Previously, the Office revenue could fluctuate quite a bit depending on when people decide to upgrade their licenses. So I'm sure many of you have experienced where you buy a old version of Microsoft Office and use it for a couple of years, and you don't really upgrade it until you really have no choice left. So this subscription model allows them to secure a regular recurring revenue, which allows them to smooth out their earnings quite a bit, and I think allows them to grow their earnings quite a bit. You can see that the productivity and business process segment, which is where the Office is parked under, has actually grown by 24% year on year. Onto the valuation side, so if you look at their P ratio, their forward P ratios as well, based on a historical as well as industry average, despite the fact that Microsoft has gone up to close to their all-time high, in terms of the historical comparison as well as industry comparison, they're not actually that overvalued. In fact, they're undervalued compared to their industry peers. And if you look at the total revenue growth as well as the free cash flow growth, it's actually growing quite well for such a large company. And onto their dividend yield, it's right now about 1.78% with an annualized dividend of $1.68 per share. This actually will mark the 14th year in which Microsoft has been able to grow their dividend consecutively. So every single year they've been growing their dividend, and the 5-year average is about 11% in which the dividend has been able to grow. So and usually they grow their dividend in June. Well, this is no guarantee that they are going to grow the dividend again this year. The fact that they have such a long track record, as well as the fact that their payout ratio is quite low at 46%, leads me to believe that they should be growing their dividend again this coming June. So I'll pass on the time to Jeremy to talk a bit about the technicals and the chart for Microsoft.
Thanks, Hungwei. So Jeremy speaking here. So let's take a look at the chart for Microsoft. So the chart that you're seeing right now at the screen is the daily time frame chart. So just to kind of rehash what has been happening for the past few years for Microsoft perspective, what we saw was the uptrend only came into play pretty nicely somewhere around in July of 2016. Somewhere to the left of this chart, not shown here, but just to illustrate, Microsoft since July of 2016 has been making this series of higher highs and higher lows pretty nicely in a stair-stepping fashion. So what's more interesting is the red and blue line, red line being the 20-day moving average and blue line being the 60-day moving average. You can see the structure for this uptrend is how whenever we get a correction or a sell-off in Microsoft, you can see how the red and blue line come in and kind of a support price and act as a springboard. So it has been true since July of 2016. Every single sell-off that we see was kind of halted by the 20 and 60-day moving average. So the highlighted areas in the chart are the point that I want to highlight to everyone over there, that is the deep buying pattern that's been forming up for Microsoft. So a general rule of thumb for an uptrend to remain intact, at least from a Microsoft perspective, is to watch for the 20-day and 60-day moving average. As long as we see this red and blue line keep up with this particular upward trending fashion and kind of a support price, we believe the uptrend, at least from a technical perspective, on an immediate kind of outlook, remains pretty sturdy. So just to highlight the more recent event that we saw at early February of this year. So somewhere around in 5th February, we saw the VIX explosion incident where we saw the volatility index spike up more than 100% in a day, causing a wide market scare to the global equity market. So during that period, we saw in the month, the Dow Jones, the S&P 500, as well as the Nasdaq fall as much as 12% in the month. So that particular event kind of caused Microsoft to hit into a sell-off as well. So from this peak over here, we saw Microsoft also kind of shed 12% from this high to this trial. But more importantly, like I mentioned again, is how the red and blue line kind of come in and stop the particular sell-off. So you can see over here, when we get massive sell-off, definitely the 20-day moving average will kind of give up its support. But more importantly is the second line of defense, which is a 60-day moving average. You can see over here the highlighted area that I'm showing. We only saw one incident whereby the Microsoft price closed below the 60-day moving average. But I can see what happened is subsequently the following day there was a massive strong buying part coming to the market. and after which once price closed above the 60-day moving average, at this particular point you can see the uptrend kind of reverse back into trend, and since then we have seen Microsoft kind of recovered all of the 12% loss and actually broke a new record high more recently last week. So all in all, you can see the uptrend kind of fashion in terms of the 20 and 60-day moving average kind of acted pretty nicely in terms of halting the sell-off, a major one of 12%. So moving forward right now, we expect this deep buying pattern to continue moving forward with the 20 and 60-day moving average continue to act as a backstop for further buying. So right now, as of our report, you can see price again kind of sit along the 20-day moving average, and we believe that provides investors an opportunity to accumulate more around the 20-day moving average. And target-wise, at least from a technical perspective, we are targeting a psychological round number of $100 next, and then followed by the next psychological round number of 105. So all in all, I think in terms of accumulation, if unfortunately Microsoft do continue to go into a deeper correction, the next line of accumulation point probably will be a 60-day moving average, which will more or less coincide with this support area around $90.86. So few key points to watch out for: $90.86 if we do get further deeper correction in Microsoft. And target wise again is $100 next, and after which $105.
Okay, so in conclusion, again, we are bullish on Microsoft because of the growth in cloud computing, as well as Microsoft's own offering of Azure, which is again has been gaining quite a bit of market share from Amazon. Just to give a bit more color on the whole cloud computing space, the three big players for cloud compute, or rather the four big players for cloud computing would be Amazon, Microsoft, Google, as well as IBM. IBM is slightly more on the AI cloud space rather than the actual storage space, but Amazon would be the biggest with 62%, followed by Microsoft at 20%. Google is slightly lower in the cloud space. So Microsoft has been gaining quite a bit of market share, and I believe that it's with AWS having so much market share at 60+%, but they've been losing that market share in terms of percentage. There's still quite a bit of runway for the Azure and cloud computing space for Microsoft, as well as the Office 365. Again, the more people subscribe to, the more people move from a traditional licensing model to the subscription model, the more regular recurring income that Microsoft can get. And I believe that because people would be paying a yearly fee rather than the once whenever they feel like upgrading, then they upgrade, there should be quite a bit of run up as well in their traditional Office space. In terms of their valuations, again, at current price, given their growth prospects, I don't think that they are overvalued. At the moment, I think that there's still quite a bit of runway for, given that there's such big growth prospects given for them, as well as the fact that their dividends, I think, still can continue to increase, which should give you some holding power in the current market conditions. Jeremy has already talked about the technicals, so we believe that right now, Microsoft is at a strong, that there's strong support at their 20 and 60-day moving average, which should provide a nice support for buying up at these current levels. So again, we believe that we had an entry price of 94.18, and the last done was 94.60, stop loss of 88.73 with a target price of 105. So with that, we've come to the end of this webinar. We'll open the floor now to any questions.
There is a question asking about Geo's potential M&A plans. The question is about any targets found or when will it be completed? So what I can tell is that the current market rate of the coal mines in Indonesia, based on dollars per ton, is about 2.5 to $3 US dollars per ton. So to do the simple math, let's say if Geo acquire a reserve of 50 million tons of coal, the price, the highest price, will be around 150 million US dollars. So whether they can achieve the ROI that is more than 20%, we think that it is easy, because based on the current coal price, that is of more than $40 per ton, and their cash costs at around 27 US dollars per ton. The cash profit, the spread is around 13 to 10 to 13 dollars per ton. So if they acquire another new mine, surely it can easily achieve the ROI of 20%. That is the minimum requirement for them. And also based on the information that management guided, the Geo has already been seeking potential targets since they issued the senior note. So far, they already have several potential targets. So we believe that this year they will announce, they will make some announcements of the acquisition.
Hi, there's a question regarding for companies in Vietnam, for example, like Vinamilk. So is there any government limit for foreign ownership? Yes, you are right. There's a limit of 49% foreign ownership for the companies listed in Vietnam. So what happened is that I'd like to bring you guys back to the Sabeco acquisition. So one of the reasons why that Thai Bev went in or rushed into this acquisition is because it's a rare gem where you don't see a huge foreign company stake in it, and then it's one of the largest beer player globally. So what happened is that Thai Bev, they acquired 56% of Sabeco via a Vietnam incorporated companies where they JV with Vietnamese partners. So they have Thai Bev actually have a 49% stake in that JV company, and in that sense, with the So in that sense, with the acquisition of 56% stake of Sabeco, that would actually give an effective interest of about 26% stake to Thai Bev. But there's a upside to that in where that Thai Bev management might actually bring in bringing the management onto the Sabeco's board, and also auditors are actually reviewing whether the effective interest might be even higher than 26%. So in that sense, they might be able to clock in more than 26% of Sabeco's financials.
Hi, there's a question regarding the US tax cut. So actually the tax cut has passed already, which is, as mentioned earlier, what caused Microsoft to do a dip earlier in the year at the end of January. So they actually incurred a one-time tax loss when they had to set aside some money for the tax charge that happened because of the tax cut policy. But going forward, that means they'll be paying less tax. So overall, again, the dip was caused by the one-time tax charge, which caused them to incur a loss, report a loss for that quarter. But if you were to remove that extraordinary event, they actually reported a positive earnings growth, as well as going forward, they should continue to report better than expected numbers, because the tax charge will allow them to pay less in tax going forward.
Hi, there's a question asking how do we see the Dow Jones performing in terms of technical. So on the screen right now, I'm flashing the Dow Jones Industrial Average. So like I mentioned just now, the VIX inspired sell-off that happened in the early part of February is this particular sell-off that we are seeing here, kind of waterfall set price action, contributing to this 12% sell-off. So this 12% sell-off is mainly contributed by the VIX explosion incident that happened in early Feb, but it has kind of passed us, and what we see is we have kind of retraced more than 50% of this 12% sell-off since then. And in terms of technical perspective wise, you can see this sell-off has been kind of halted pretty nicely by a support area over here at around, give me a second, over here around this particular level. So there was some support back then that happened in October to November period of 2017, which come into play more recently in the 12% sell-off, the halted this sell-off, and since then we have rebounded pretty nicely. So in terms of the medium-term outlook wise, you can see how price, at least from a Dow in perspective, has kind of a move back above the 20 and 60-day moving average. That by itself is kind of a supportive that we are back in this uptrend. But more importantly, right now, there's this interesting triangle that is kind of forming up within the Dow Jones Industrial Average, which I will draw right now on the chart. So So you can see price is right now squeezing hard within this particular triangle. So I think ultimately what we want to see moving forward is a clear resolution of where price will break out moving forward, be it to the upside or downside. But with the benefit of hindsight from what we see on the Nasdaq 100 as well as the S&P 500 index, both are showing that the bias for this particular breakout will be to the upside, since the Nasdaq has already broke a new record high. And S&P 500 is also, I think, in terms of performance-wise, outperforming the Dow Jones Industrial Average. So in terms of the outlook for the Dow, we believe this particular breakout will be to the upside. And once that happens, probably the Dow will continue to rally back up to test the all-time high of around 26,600 points. So outlook-wise, we remain pretty positive on the US equity market as a whole, which also is kind of being supported by our recession tracker right now. Like I mentioned again, recession tracker-wise, we would still probably see a few more months of upside in the general equity market first before we see further market weakness.
There is a question asking about where the coal energy currently stands against the other type of energy. So as of now, to break down the fossil fuel consumption, coal accounted for around 33% of the total fossil fuel consumption, and natural gas accounted for around 25%, oil accounted for 30%. There is a question asking about the view on Alliance Mineral. So we don't have any coverage on this counter. However, based on the recent announcement, the production of lithium just started. However, there is turbulence on the management. That's our comment so far.
Okay, we got this question on this is Paul here. Just answering on behalf of Gongzhe, our coal analyst. What is the possibility of coal energy losing steam against renewable energy? Okay, when it comes to renewable energy, it is very important to take note that renewable energy is a peaking energy. It is not your base load. Basically, what that means is that when you use solar and wind, you cannot store the power. The power comes intermittently. So for instance, for solar, obviously you get power in the daytime, but nighttime there is no power. So you cannot rely totally on renewable energy at the present time. Because during the nighttime, obviously there's no solar. So you have to rely on these so-called base load plants, which are your coal power plants. So until you get some cheap source of storage, whereby once there's solar power and the solar power can be stored, then only renewable can really be part of the mainstream energy mix of a particular country, especially for the emerging countries. Yeah, thanks. I'm just answering on behalf of Gongzhe. Yeah. Okay, if there's no more questions, we will end the webinar here today. Do tune in again next week for our next webinar, as well as visit our stocksbnb.com to see any other reports we release throughout the week. Thank you.